Hey everybody, Boris, last week BK Forex. Welcome to the weekly technicals for December 18th to December 22nd, 2017 for the majors. For euro dollar, dollar yen, and pound dollar, waiting for the breakout is really the theme this week as we've now passed all of the economic data and actually pretty much passed most of the political risk as well, because it looks like the U.S. tax bill is probably going to go through next week. Most of the votes are now counted and basically done for. So as we close out the week, it looks like most of the major event risk has really passed us. And now the big question ahead is whether the market is going to get behind the dollar or not. And as we open up the calendar, we don't have much on the calendar next week, and the charts look very uncertain as well. But let's take a look at the levels first, and then we'll take a look at the calendar and see where everything stands as far as the levels go. So euro basically stands at 19 to 17 still, very much approaching a really key support level, the 17 level. Definitely has a negative bias, but not overt one. Yen, indeterminate. That's really the critical thing here. And I'm going to show you in the charts where I think at this point you do nothing until it moves one way or the other, because you really need a market signal to tell you which way the decision is going to be made. And last but not least, of course, we still have the idiosyncratic risk with pound. Pound is kind of relative weakness for the end of the week. It's still holding above the 33 handle. But the Brexit negotiation pressures are certainly going to mount as we get now into the much more nitty-gritty of the actual negotiations, now that we've sort of settled on a broad agenda and a platform. So overall, really not much on the calendar. If you look at the calendar this week on the major side, we have the IFO report, which probably is going to be very good because data out of Europe is pretty good. We have the CPI data, which may be a little bit positive for the euro on Monday. And then beyond that, we don't have anything else. Housing starts in the U.S., existing home sales, just more housing data, which is very much second tier. And then as we go into the end of the week, just personal consumption data, GDP numbers on Thursday, and nothing on Friday. We're really pretty much coasting into the week, and of course, the week after that is going to be even quieter as the world goes pretty on a full-on Christmas holiday. So. There isn't anything here on the calendar on the major side to kind of move us one way or the other, which means that we kind of have to look at the charts for any potential clues. Now, as we close the week here, clearly euro is negative bias. We're actually closing on the lows of the week here. Oh, sorry, lows of the day, not the lows of the week. Let me just take you to the week. No, sorry, this is the lows. This is the weekly candle. I'm sorry, lows of the week. And it's a pretty ugly candle actually, because it's a flame out weekly candle. It does suggest that we have a chance here to break towards the 1500. But really, and this is the critical thing, really you can't commit to a short euro position, in my opinion, until we take out the 17 handle. This has been pretty much the big support level here. Anywhere you go, right over here, this whole level over here, the low is 1730, but really 1700, right? Unless we take out the 1700, I think the possibility that this could be yet another bunch up support level still exists. Having said this, this is a very negative candle, although euro is notorious for kind of reversing the negative candles, right? So you look at here, we reversed the candle. This looked like it sent a very negative candle here for reversal, and it kind of reversed it the next week, paused it, and then we had a little bit more of a burst. Euro is not a very good signal for shooting star candles. It actually seems to be almost a contrary signal in some ways, which is why I urge you caution to not short the pair until and unless we take out the 17 handle, because then you would have legitimate technical break and a move towards the 1500 as a potential support area. To the top side, it's still the 1800, 1900 resistance level. That's really very much the big level here. It would be very unusual, but that would certainly be a very bullish construct if we completely flipped around the price action and took out the highs of this week, which would be 1862. If we took out the highs next week of 1862, that would be a massively bullish construct and would suggest that we have a higher low and potentially a move towards the 120-100. But until you get a definitive signal one way or the other, that is taking out 1860s to the upside, taking out 1700s to the downside, the best strategy is to simply watch and observe. Yen, not in a similar kind of situation, but it's also very indeterminate. The yen just does not seem to want to go up, and this is very troubling because there's so much positive U.S. data all the way around, and it suggests the market really remains very skeptical about any further rate hikes. Look at the yield. We're 235, after a hawkish Fed. We couldn't even get up to 240, much less 245. And that's why you're seeing the yen really hold tight at around this 1250, 1200 level in a consolidation. The key level here really is probably 111. That was the big break. If we take out the 111 again to the downside, that would be very negative because it would really pretty much show this is a distributive pattern all the way out here, not a consolidative pattern. Right now, we're still in a net positive bias. This is a W formation. We do need a move really above 1400 to get mildly bullish. Until you get that move above 1400, I just don't think it's a buy. I mean, it could be a spec buy. You could put a spec buy and put a stop underneath 111 and just hope that it rallies. But the market impulse right now is not really giving you a lot of confidence that there's more continuity to go here. It's still very indeterminate. And then cable, very much its own idiosyncratic story, but also ending on the lows, kind of a low volatility week for cable actually here, not a lot of range, but still doesn't look quite good. We've made a lower high here, and a test towards the 130, very much possible. Cable also notorious for doing the flip, so you can't trust the signal too much. In other words, 1 week down, 1 week up is a very, very normal formation for cable. So in short, I'm very leery of anything on the major side. I don't see a single signal here that makes clear, definitive case for continuation. The field is rife with potential fake outs and breakouts, and that's why you need to really wait for the breakout so that you don't get trapped in a fake out as you go along. So to me, the key level is 114 to the yen to the upside, 111 to the yen to the downside, but a 112 break would be ominously bad. 117 break in the euro, very bad, and thus could potentially opens up the run towards the 115. And a flip, a takeout of 1860 would be surprisingly bullish and puts us back on a path towards the 120. Until any of those levels get taken out, I would just stand by and watch. And with cable, of course, I'd be watching the not the 133, but the 132, because the 132 is given. That really pulls it towards the 130 very, very quickly. And that would suggest much more ominous developments on the Brexit front than the market is currently considering. So that's how the week shapes up. Is the it's the final week before the big Christmas week vacation in the Forex market, and this is going to be potentially the week where we either make a move or break a move, but don't move until you actually see it. Wish you guys the best luck, the best trading. Boris, over and out.